Part 1, 7.1 Data Entry Errors, according to the FIA FA1 book. All right, class, let's begin. Imagine you're working in a company where you need to record sales, purchases, or payments into a computer system. Who does this job? Usually a data entry clerk or an accounts assistant. That means you'll be responsible for typing the right numbers in the right place. But here's the problem. Open quote. According to Section 7.1 of the FIA FA1 book, data entry errors are one of the biggest risks in computerized accounting systems. If the data is entered wrongly, then the system will process wrong results, leading to serious consequences like inaccurate reports, wrong balances, or even legal trouble. Close quote. Let's now go through the 6 major reasons for data entry errors, and I'll give real-life examples for each one. Common data entry errors from FIA FA1 Book Section 7.1. 1. Source documents can be damaged or destroyed. Example, a supplier invoice is left near a printer and someone spills coffee on it. Now the price is unreadable. This can lead to the wrong amount being entered, or no entry at all. 2. Poor handwriting can make forms hard to read. Example, someone writes 3107-2023, but it looks like 1101-2023 because of messy writing. The clerk types it wrongly, and now the sale shows up in the wrong month. 3. Incorrect or missing details in source documents. Example, a receipt is missing the tax code or has the wrong customer number. The entry might go to the wrong account, causing future confusion and reconciliation errors. 4. Transcription errors. This means copying something incorrectly from paper to screen. Examples, typing 54 instead of 45, entering 5,000 instead of 500, using the wrong date format like 2023-11-07 instead of 07-11-2023. Even one digit wrong can mess up reports, especially in financial data. 5. Poorly trained staff. If the person entering the data doesn't understand accounting, they might enter expense as income, confuse debit and credit, post to the wrong ledger. My cousin once worked in a warehouse and had to enter stock items into the system. He entered 200 chairs as $200 instead of quantity 200. The inventory reports were a disaster. 6. Malicious intent, fraud, or dishonesty. Yes, sadly, this happens too. Example, an employee intentionally changes the numbers to hide stolen money or overstates sales to earn a performance bonus. According to the FIA FA1 book, these types of errors can happen before the system even processes anything, and they affect the reliability of the entire accounting process. But we're not done yet. Even if the clerk enters the data correctly, the system itself can have issues. Software bugs, corrupted files, incompatibility with other programs. Real-life impact. A small typo in a payment amount or a customer's name can delay payments, cause tax filing errors, mislead the business about its profit, make auditing and reconciliation harder. That's why the next part is very important. Part 2, 7.2, Reducing Data Entry Errors. Now that we know how errors happen, let's talk about how to stop them before they happen. As your teacher, I always say, prevention is better than correction. Let's now look at the methods recommended by the FIA FA1 book and expand them with some real-world context. How to reduce data entry errors. 1. Properly trained and experienced staff. Trained staff understand what they're doing, spot mistakes early, know how to use the software efficiently. A company might invest in short courses, training manuals, or shadowing senior staff. 2. Automatic data entry tools. Examples, barcode scanners, OCR software, optical character recognition, mobile apps that snap a photo of a receipt and autofill the data. This reduces the chance of human error and speeds up the process. 3. Well-designed forms that are easy to read. Good forms have clear headings, are logically ordered, use enough space to avoid cramping. Example, a purchase order form with separate sections for supplier info, items, prices, and tax codes. 4. Data entry screens that mirror the source document. This means the screen layout matches the paper document. For example, if the invoice has name, item, quantity, price, then the data entry form should follow the same structure. This reduces confusion and makes errors less likely. 5. Using tick boxes or drop-down lists. Example, instead of typing cash, bank, or card manually, just click from a drop-down list. This eliminates spelling errors or invalid inputs. 6. Avoiding long sequences of numbers. People make more mistakes when typing something like 8742315487. It's better to break it up into smaller chunks, use barcodes or autofill features when possible. 7. Double entry verification. This is where the data is entered twice, either by two people or once by the same person, and again for checking. In many companies, someone enters the payroll and another person double checks before it's approved. 8. Validation techniques. The system automatically checks for errors. Date can't be in the future. Quantity can't be negative. Customer ID must match existing records. Many accounting software programs, like Sage, QuickBooks, or Xero, include built-in validations to prevent common errors. Example story. Imagine a business entered $5,000 as a payment from a customer, but the actual amount was $500. Because there was no verification, the customer was shown as overpaying by $4,500. Months later, during an audit, the error was found, and the company had to refund money it never received. Final advice for students. Pay attention to small details. Double-check your entries. Always ask if something looks suspicious. Learn how the system works, not just where to click. And remember, your accuracy matters.